So, week 31 this year of trading. Let's have a look at the markets, and you should notice, or you should have noticed by now, that there is not a whole lot of new stuff going on week to week or on a week to week basis. You should really realize that when you trade, and it doesn't really matter if you do a trend following approach or you do a different kind of approach where you reversal trade or whatever. Trading is not about actually trading. Trading is about putting in the order and then simply wait. So it's more or less a patience game where you make yourself available to whatever the market is offering to you. First of all, you wait for the market to give you your entry signal, your setup, where you enter, and once you've entered, you didn't do anything but put in the order so the market can enter you as soon as it reaches that price at some point in time, and you don't even know if that is going to be tomorrow or in a week. And once you've been in the market, or you're in the market, then you don't do anything. The market is doing it for you. So on a longer period of time frame, maybe on a daily chart, you don't watch the market. You come to the market as it starts to near its closing time to change your stop, or to simply realize or acknowledge that nothing changed, and you don't do anything, and let the next day come, let it go by, not even watching it, not even caring about it, until at some point the market is doing something because of all the new information that comes into the marketplace during that time where you're holding your position, and at some point it's going to tell you to exit, and then that's it. That's your profit or that's your loss. It's not in your power to control what the market does, how fast it does it, and how much it really wants to give you. Now, over time, I guess you do get some sort of feeling, or it becomes easier to actually wait for what this God is telling you. And the last week we were focusing a little bit on the euro dollar. This whole side move has been discussed quite a lot of times in my videos. Now let's have a look at the current market action in the last week. In the previous update, I was talking about this market having broken through this fractal below the balance zone, simple breakout to the downside to continue its previous trend down. But ever since this breakout was hit, you can see that nothing at all happened. This is a weekly chart. You do have quite a lot of weeks here where nothing at all happened. You have this huge candle here, which is the Brexit candle. This one actually got the breakout going ever since this harsh movement to the downside, and then retracement right back to the breakout level. You have a lot of weeks here, 6 weeks, where the market isn't going anywhere. And last week we were looking at the price coming back up above the breakout level and touching the balance zone. And I was kind of speculating last week, saying these moving averages, this balance zone, is not just some joke. It's actually a pretty significant dynamic support and resistance area, and you can assume that in a trend, as soon as this area is penetrated, then the trend will be in some sort of correction mode, or it's just about to enter a correction mode. First it will do it internally, and at some point it will do it on your trading time frame, and this is when the market actually looks like this. In the euro, the breakout had been hit, we didn't get going anywhere, and we come back to the balance zone, the place where it actually wants to be. If there were no new information in this market, then this is where the price would be. It would simply be going pretty much nowhere, actually, as you can see in all of this time. Here, there's some sort of news, and you can now go out and actually research which news it was. I don't even care which news it was. I don't even know when the news come out and what kind of news come out. I'm just holding my position. I'm just trading the system, following the market. And as you can see here, the price bounced off the balance zone. It went up inside of it like I kind of thought it would do, and then you see prices pulling away from it, simply because this zone is always attracting prices and it's pushing prices away, this balance zone. And when you get a trend down like this with a correction going on for more than a year afterwards, you simply wait for your breakout below the balance zone. And you actually only had two. You had one here, and this is the second one. So in all of this time, you didn't do anything. You would just be waiting for the trend direction to be continued. Here we now have a pretty nice chance that this kind of rejection of the balance zone may lead to a new low here. So even if you see a price spiking up into the previous fractal area here, where you have your resistance, that still doesn't negate the breakout. You just have to make sure that you have a trading account that can handle the risk on your time frame. So if you trade the weekly, you want to think about how much capital you need or what kind of instrument you want to trade and which size you're going to trade it, so that this loss from this lower black line to the upper black line doesn't cost you more than a percent or maybe 2%, depending on what you like. Then you have to withstand these pullbacks and just stick with the position. Now, if you see a lot of people nowadays that do supply and demand trading who would have a limit order up in here, or who would be waiting for a reversal in this zone again, blah blah blah. What do you do if price never comes back to that? So that's the idea of the breakout. You just trade the breakout. It doesn't even matter if it works or not. You have your risk adjusted, and statistically you have the odds on your side, and that's the point of it. And in here with these indicators, we can well, maybe we can, you could say that the probability is on our side, even though trends don't even happen 50% of the time. They happen much less of the time. Anyway, in this case, you see the rejection, and it must be, or it should be, a pretty good or significant point here, which could now send prices lower. We kind of had the same situation going on in the US dollar, where I said that a little spike out of the balance zone and then a rejection of that level, so price can continue its previous uptrend, is a possibility. And this is not a huge candle that we see here, but we definitely did see on this Friday some rejection down here at those price levels around the 11,880 mark. We will of course have to see if this can be continued, and we do see some new highs before this overall uptrend is actually over. But you can still see that such a huge candle down here, even though it's a green candle, it opened up here, it closed down here. It's pretty significant. After the breakout was taken on this candle already, we were trading up and then right back into the balance zone. This is where price wants to be. This is where it finds its support in this case, and as soon as you have some sort of news, price will move on the path of least resistance, and this is the path of the overall trend. So in here, again, just like in the euro, you are in for the 6th week as well, and it's not a profit. It used to be a profit here in this week and didn't look too bad here either, but you're just waiting. You're not doing anything. You haven't done anything in this market for such a long time, for 6 weeks. Trading is waiting. It's not actually trading, not putting in orders and tightening up stops and adding to your position. That is very, very rare that you do these things, depending on your time frame, of course, but especially in trend trading, you make your money by sitting, not by trading. And the US dollar index here will prove, or will still have to prove it if it's actually moving up, but it's looking okay at this moment. It's not looking too bad. Your stop is in place, and it should be right below the balance zone. There will be a video in the coming weeks where I'll talk more about these good levels to place stops, but you want to place them outside of the balance zone. Usually a fractal on the outside would be a good place. This one is really far away, so after this week you would have a choice to put the stop right below this candle, and of course here, this is not a coincidence what prices are doing. You have the turnaround point of the green line, of the green moving average, and this would be right below here, a good point to place your stop. So let's simply follow the price action in this market here and not determine by ourselves, or try to dictate ourselves if this is taking too long, or if this has been enough profits or too much loss or whatever. We control what we can control, and that is the risk and the emotions, where we enter and where we exit. What we can control is how much money we make. So we want to control how much we can lose or how much we are willing to lose. We cannot control how much we are going to make. That's why we also don't want to have profit targets, because we don't know how far it's going to go, right? So let's at this point immediately switch over to the indices, where this principle becomes true again. It was just 3 weeks ago or something when I read on Twitter that like 90%, even more, of people are short all of these indices. They're talking about the S&P 500, but it doesn't really matter. They all show you the same picture. You have the breakout. People are short because it's a new all-time high. How far can this go? There must be this must be a bubble or whatever, and they are shorting. And that's I don't know why they do this, but in a sideways market like this, of course, they are going to be the winners, but they are not the ones who are profiting from a trend where nobody knows how long it's going to last and how far it's going to go. If you just have a look at the trend here, and of course starting actually in the year 2009, this is all bullish market, and you just buy and buy and buy and you hold it. People love to short inside of these trends. It's like they think that when they catch the reversal, they have such a good trading location that they will make a lot of money. But the fact kind of is that with their price targets, they limit their profits, and then they're not there when the trend is happening, because they are already thinking about going with it the other way. So they would try to pick this bottom here, and then they enjoy their profits up here, which is great. And over in here, because we are now hitting this fractal and these fractals, they are shorting, and they will hold on to their shorts, because why would the market trade up? It's at an all-time high. This correction, obviously, for some people, I don't know why, is not good enough. It's not deep enough. It's not long enough, and so they try and short and short and short. And then what you get is this kind of price action, where in the Nasdaq you can see it even a little bit better. You get candles that move straight up, and this is the sixth candle also in this market here. They move straight up. Price closes at the high of the week almost every week, and this week again. It doesn't even care about having all-time highs on, well, the Nasdaq doesn't, but having these highs on this side. Let's switch back to the, or maybe even take a look at the S&P. It doesn't matter that it has these all-time highs over here. Look at this market. Look at how it goes. There's some internal correction going on in these candles. When you take a look at the daily chart, this becomes a little bit clearer. Price is going inside the balance zone. But I don't see any devastating crash scenarios unfolding where this is really just a bull trap, and you have people selling so much up here that the market is going to come down. It just doesn't happen in this case. It seems we're just straight up. There is nothing more to say. That to buy the breakouts, calculate your risk, and then enjoy something like this. Take the signals and hold it, and hold it, and hold it, and hold it. It's the most boring game that you can play. Because if you just do whatever the market tells you to do, there is no excitement in this. You're not actually betting or gambling on something. You're speculating with a very calculated risk on what could happen, and you have a statistical edge underlying this speculative thought, and that's pretty much it. There is no, you don't even care if the market does it or doesn't do it, because you know from the very beginning that not every trade is going to be a winning trade, and that losing trades are just part of the game, and you actually need them to get the winner. You cannot filter, or I don't think that anybody can filter out the winner and just pick the winners and stay with the winners. I found a website this week, has been around for 3 years, tradingschools.org. There's a guy there who has been a fraud himself in the 90s. Now he's evaluating different mentoring programs on trading, and it's absolutely amazing. I spent a couple of days reading all his stuff. Absolutely amazing how it truly seems like 95% of every mentor trading system and trading program that you find online is a scam, because people are not able to do what I just told you, that you just wait. You put in the order and then you go away and you wait. We're kind of wired to work a lot and to have a lot of stuff going on, to be stressed out. And when we have the feeling that we did a lot and that we deserve a lot and that we should make a lot of money in our kind of world. But trading is completely different than that. It's completely different than that. Especially when you take this kind of an approach where you follow the price and you don't care about the good, picking a good price down here. Like there's some people, mostly day traders of course, who say that they don't want to buy retail. They want to buy the good. They want to buy at the good price where the institutions, where the banks, the hedge funds are buying, which is complete. Well, I don't agree with it. You just follow the price wherever it goes, because nobody knows when it's going to turn, if it's going to turn, how much it's going to turn, how fast it's going to turn, all of this kind of stuff. The DAX sets up here in this kind of sense. Now the American indices have been broken out, or they did break out already, and they are staying up high there. There's no real question asked at that point. And now in Europe, we're coming around as well. The German DAX index here, as you can see, the past week, it started out really weak, but it's just an internal correction. We are so strongly up at this moment, hitting the upper border, or the upper resistance area here of the sideways movement. And now you put in your buy order and then you do nothing. If you have the money, go on vacation for half a year or something like that. Check the chart each Friday night and then manage your positions, and that's it. There's nothing else to do. You don't even want to watch the market, because it creates a lot of emotions and a lot of internal stuff during the week. All the noise in the market, it's going to drive you insane. But and you're actually destroying the principle of simply letting the market do whatever it wants to do and following it, if you pay attention to every little noise. A daily chart, for example, is nowadays there's a lot of noise in this market on a daily chart. The daily chart is not what it used to be, in my opinion. 10 years ago, the daily chart looked like the weekly chart do nowadays. That's not the case anymore, so you do have to wait even longer for trends to happen and to get the entry signal and then to follow them. But profits are much greater as well, since you're just staying in so much longer. On the weekly here, the DAX index gives you a new buy signal if you're not long on this on the stock markets already. You do also have a new signal in the Euro Australian dollar. Again, it's so simple and easy. You don't even think about it. You just have a market going nowhere up here. Now gives you this downside support, and if it's broken, you sell, and you have your stop in somewhere in the area of the balance zone, and then you go with it. At this point here, as you can see, you did get a fractal sell already. However, it was not the outer fractal cell, so that can be dangerous at some point. Trading the fractals as breakout signals really requires some time spending with them and really looking at what they actually tell you. It's not so obvious and easy to know which fractals are the good fractals to buy and sell. There may be some other ways to define a breakout better or a little bit easier for somebody who's not used to it than the fractal. So anyway, if you took this fractal here, you get your order in, you hit on it, and then from that moment on, you perfectly sold the low. You will get stopped out somewhere here in this area inside the balance zone, just so price can come down and now probably hit another fractal again, and then you sell again. But that is trading, you know. Paul Tudor Jones and some other great people, they said that sometimes they're in 3 or 4 times in a market and stopped out and stopped out and stopped out before the 4th or the 5th time. Eventually the market is able to take off. So again, the principle of patience and the principle of not knowing what happens and even assuming that every next trade will be a loser is actually contributing to you making profits, because you never risk too much. And that the same is true in here, even if this one doesn't work out, but the next one then does, and this thing moves for 1500 points. You won't even remember what happened up here. Of course you will, since you're documenting it, which is definitely something that you want to do to improve your performance. But it will not make a big, or will not have a big influence or impact on your results. If you are short 3 times up in here, it never works, and then you get your 1500 point move, as long as you are calculating your risks to 1 or 2% on each trade. Otherwise, you will be blown out. There will, or your, if you define your risk by how well or how bad a signal looks, then all that means is you think that you know more than the market, and that will eventually not be a balanced kind of approach, and your losses weigh heavy, much more heavy than your winners do. And over time, over a decade, 2 decades, that won't be a winning strategy. So you really want to have the positions that you're in or that you're entering at the exact same risk level. Otherwise, you're kind of manipulating the basis of, or the basic foundation of a trading system. Another market that just keeps going is the British pound, and we have been taking the British pound Australian as an example here. The first breakout was taken here, the next one is here, and the last week here is now pretty weak again. But before that, you had 3 weeks where nothing happened. You just had a simple retracement. If you check Twitter or whatever, you can see people who are buying in here and who say it's over now and we've hit an important support level, and let's try and buy this for a rally up here. And I always wonder, why do they want to do this? If they just stick with where the price is going right now, then that's the biggest profit that you can get. Why do you want to go against it all the time and bug the trend? How big can this rally really be that you're getting in a downtrend like this? Just stick with the trend and that's it. So another sell signal showing up in the British pound Australian. You should be short already. Let's see how far this goes. It definitely, in my opinion, does still have some way to go. Look at how drastically this thing has been dropping. This is only a small breather inside this huge down move. We'll still have to see once this signal here is taken how well we are able to come through this heavy support area. My guess is it won't be much of a problem, and we're probably over the long term, of course, maybe towards the end of the year or maybe in late fall, you're gonna see this thing around 150, 145, and that would then have been quite the move from the breakout level here at 182. Okay, we're talking 3,000 points. Now, the people who picked tops and bottoms, they would have wanted to get in here just to get out here, you know, because that's the breakout, and breakouts fail, and they bet on this moving sideways, and ever since the great stuff has happened and is probably going to continue to happen, they're not in this market anymore. So just follow the trend as long as it runs. The same is true in gold and silver. I think we do have a lot of people who are disappointed on these commodities here because they are not moving with the speed that they were hoping for. Like 3 or 4 weeks ago, you had a lot of people saying that this is probably a long for the rest of the year, and in my opinion it still is. But that doesn't mean it's going to move right away and it's going to move out there right away. You just want to follow your system, and in this system here, as long as the price is above the balance zone, you're staying long with it, and you have your two breakouts, you're long, and that's it. There's nothing to think about. When you open the chart, of course you don't get this candle that moves out all the way over here, but to 1500 maybe in 1 week. The question is, do you want that? As soon as you have this high volatility stuff going on and the market is pulling away from the balance zone in a really crazy and fast fashion, then that means it will have to come back in the same kind of manner as well. This is very nice to be observed if you check out how silver likes to behave. Just look at this kind of stuff here. Look at how the market zoomed up, straight up. I mean, you don't have this one candle that pulls away so fast, but all of those candles, without stopping, they just go and go and go. And if you take a look at the distance between the candles and the balance zone, then what you see is it gets greater and greater and greater. And just like a rubber band, prices will come back. They will fire back. And it only takes them 1 week to wipe out the previous 3 months. And you don't want that. You want to have slow and nice market movements. Looking at this price action here, you don't see such quite such a pull away from the balance zone. So in silver, just like in gold, people are being disappointed because the market isn't moving as rapidly as they were hoping. And in silver, you do get quite the down bar for the week. But with this huge candle to the upside, what do you expect? What kind of move do you want to have in this market? Do you want this to move to 50 in 2 weeks? Now that's not healthy. What you want is a year and a half of this thing not stopping moving up, and every day it goes up and up and up, and then you have a couple of weeks where it doesn't go anywhere, but it's also not really going down. And then all of a sudden it will pick up its previous direction and just keep going up and up and up. And all of the hyped up people, they will try and sell and sell and sell. As soon as this thing just gets a little bit weaker, they will try and sell because they think the great reversal is coming and they have their target in and whatever. We do the exact opposite. We want to stick with it as long as the market tells us that it's healthy to do that. And in my opinion, in gold and silver right now, that still is the case, and it will remain the case probably for the next 8 weeks, unless we have some sort of very heavy impacting news that sends prices right inside the balance zone. Now, if that happens, our whole scenario is negated. We're getting out. But we're far from that, and we don't need to think about stuff that isn't here yet. Let's wait for it. Let's stick with the price in the moment. And at this moment, it tells us stay long. be long and stay long, and that's pretty much it. That's all you want to do when it comes to trading. Trading is very boring. It's the most boring thing I've ever done after I've done it for 10 years. Okay, so it was pretty exciting for quite a couple of years there, but it didn't make any money. You know, this whole CNN and chat room and I don't know kind of atmosphere will not make you the money. The money comes from letting the market do whatever it wants to do. And that means that you're not doing anything except for being available to perceive when the market shows you the opportunities. Put in your order and then go away. Switch off the computer and then come back as soon as you need to do something new. That can take, if you trade a weekly trend, that can take more than a year. So we as humans really have to be very, very cautious. We have to be very, very calm and not be too impatient to step or to make one step before the other and do something that isn't in the charts or do something that the market doesn't want, because that's when we will start to lose. Thanks again for watching the videos and see you next week.